Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. And what we're going to go through right now is a bunch of different charts. I'm going to look at a whole bunch of different sectors. We're going to see where the opportunities are or where they're not at. And I'll give you my opinion. Again, I'm going to just kind of describe my paradigm, my viewpoint is I buy the cheapest assets out there. I sit in those assets until they become expensive. The time is your opportunity lost if you're in it for a very long time. Uh, I think that a lot of these are such great opportunities, and the risk reward asymmetry here. So it's an asymmetric bet, very large rewards, and your risk is limited to the downside because we're looking at historical figures with ratios, with technical analysis, the charts. We're looking for newly established breakouts, uptrends, things that are doing retest moves. We're basically buying at the lowest risk, greatest opportunity areas for rewards over a 10-year plus bull market in some of these either commodities, precious metals, emerging markets, whatever it is. So here I'm just going to start looking at a bunch of random things to see where the opportunities are. And what I've got behind me, and again, this is just my financial opinion, take that for whatever it is, whatever it's worth, whatever you want to use it for. We've got the Thomson Reuters Core Commodity CRB Index priced in dollars. What I do is I take a big picture view and say, oh my goodness, this thing looks absolutely fantastic. That's logarithmic. That's not logarithmic. You can see that moved a little bit. But we've broken to the upside here, and we've been launching higher. Now, would I just go jump on this? Maybe. I mean, I would look for sectors that are low in commodities because what this is telling us is that the CRB index, the commodity index overall, is going higher. And what this is telling us is that we've got an inflationary environment on our hands, that we are in an inflationary environment. What does that mean? Last bull market, I had a buy signal down here for 98.99 to be buying commodities. If you had bought commodities, what would the ride be like? You'd say this is what a lot of, I'll say it, less seasoned investors would do. They'd say, this is awesome. They get this. And now when it pulls on back, they're going to say, what's wrong with commodities? How come it's not going up? I'm going to sell my commodities. I'm going to go back into stocks. And they go just crazy. All right. The housing real estate market was a buy the entire time till here. That is our holding period. It doesn't mean that the hold, that we're just going to be on some smooth sailing waters where we're just cruising to victory. It's not how it works. We're going to lose some places at some point with the volatility as we come up through this bull market. We want to hold from this point on down here. We want to be buyers down here, buyers down here, and we want to be sellers up here if we can do that. Or sellers up here if you get a little bit scared, or in here. That's a big move in terms of purchasing power gains against other assets. So it's not going to be an easy ride. This was our buy point down in 98.99. To 01 would have been another time to reload up and then be a seller up in this region in 06 to 08. 08 is where I'd be really interested. And I'd maybe even hold all the way till 2011 if you got the cojones. But I would have been out here because the housing starts really, this caused the crash there. And you could rebuy, re-ride, and then sell again if you wanted to. But I would have been in stocks at 09. So that's the ride. It's not going to be an easy ride. We're going to get some volatility. This isn't going to just go straight up, guys. That's my guess. We're going to get a pullback here and there. We've broken the important thing is we've broken this down, this pattern, this falling wedge pattern to the upside. Then you ride it. You just hold on and ride it. Your housing starts is what is your guide and your ratios. And I released another clip on that before. Now gold's breaking out as well. That means something. It means that the gold market's saying, hey, look, we have an expansionary phase of real estate. We've got inflation all around us. We've got interest rates that are about to come and go up. A rising interest rate environment, gold loves that. It really wants to run. 2018 and 19, they had a rising gold interest rate environment. And then back in 2020, we had that crash, and then it took off as well because we were in the middle of a move upward. This is the last commodity bull market. From 01 to 2011 was that big move in precious metals. 98 is where I would have been buying with our buy signals in 98, 99. So what happened is you're going to be buying in 98, 99. You could buy 2000, 2001 until this really started to take off. You had a good couple of years to buy this. Other people, oh, well, I would have been in something else. Guys, this was the big move. It was in the 200s. If you were buying and cost averaging in the 200s of gold, and you could sell it somewhere on the back end here, you would have made a killing. You could have sold it at $1,000 and made 5 times your money at the top of the housing starts, real estate market. You could have bought silver at the bottom in 2009 and rode silver all the way up. That is the play. That is the play, I think. Silver, and I don't have the marks on silver. Silver went all the way till 2003 and then just absolutely went like an animal style. So if you were buying an 02 like at $5, rode it to $20, sold out, bought it back at $8, and then rode it all the way to 50, $40, $50 over here and sell it on the way down. We've got that same type of move. We got a nice, good bullish engulfing pattern. What this is going to do is resolve itself higher. We've got a big move coming. It's not the time to be impatient. And some of these, we could throw a buy signal in 98, and this thing went sideways for a good couple of years before really rocketing higher. Does it matter if you're getting a 10 or 20 bagger out of it? It doesn't matter, guys. It doesn't matter. Platinum was another one that did very well. If you'd bought in 98, 99, you'd been buying at the bottom. It came up, pulled back, just like our pull up and came back. And then it ran like heck from 2001 all the way to 08. I think platinum's going to do incredibly well in the beginning of this bull market. It's right there. So I think the entire precious metals markets are very low and great opportunities. Crude oil, looking at crude oil, overall, I think crude oil is in the middle of its move. It's going. Yeah, could we pull back some? Yeah, that's fine. It's not a big deal. However much we pull back, even if we pull back to $70 a barrel, we could go rocketing higher here. We could really start moving. So even if we get the pullback, it's a buy the dip type move because we've broken out of this big pattern. So that's something I would be looking at. Natural gas is another one that I think is of great. We've broken this long-term trend, pulled on back, and I would be a buyer here for a potential move higher. And this was the move from 98. You would have been buying at the bottom here. You could have rode this thing. It's a wild ride in natural gas with the seasonality and the weather and the hurricanes and all these different things. But overall, it was a move from a very low price to a higher price, a disinflationary type period with a housing market that wasn't pumping out homes. And now we're pumping out homes, and this, I think, is going to go far higher. Natural gas is going to be a very good bet, in my opinion. Looking at some of these other, like the Sprott Uranium Physical Trust, this thing is coiling up right in the corner. I'd be a buyer right now. I would be cost averaging in for the Sprott Physical Uranium Trust. This is right at the tip. So that's a very good, I think, investment right now. And we've got URNM. This guy's been pulling on back. I think this is one to look at as well. It's just getting caught with the cross currents in the overall market. Once the overall market, once physical uranium, once uranium breaks to the upside, this will be a runner. Last time interest rates were going up, uranium went up quite dramatically when interest rates went up with it. So that's one I would be looking at as well. The solar area, I've turned more negative on it. It seems like money wants to go into this sector, but I just don't see how rising energy prices, rising commodity prices, and inflation is going to help this sector. This is a consumer of minerals. It's not a producer of minerals. And it may produce power. This is a kind of a rising, whenever you have a pattern that kind of rises up like this, it's up and then it breaks to the downside. It's a continuation pattern lower. We've been continuing lower. I was hoping this would break to the upside because I don't know how solar. We don't have a whole bunch of information on solar, but I think we still have some further downside in it. And I probably wouldn't be jumping in. I do own a little bit of it, but I'm not as confident in it as, say, energy like uranium and oil and natural gas. So I probably wouldn't be there. The diversified mining companies have done very well. They've been holding up well. We've got monster patterns that we can break on these guys. COPX is one that's broken. It's got the double booty bottom. It's moving on higher. That one looks really good. That's the copper ETF. Rio Tinto did a retest here. It broke out, did a retest. And now we've been moving higher in Rio Tinto. That one's been very good. I own a lot in that. BHP is another one I own. It's been moving on up. These things have monster dividends, dividend yield of 13% in BHP Group, and I'm just collecting dividends on all of them. Glencore is another one. It's a big copper company. It does have some other, I think it's got coal and some other things that it mines. That's been rocketing higher. Everyone on the channel knows I said, hey, look, we break out of here. You got to buy here. Buy, and let it make you money. Ride it higher. It's been going higher. It's been looking really good. A lot of these copper companies have looked absolutely excellent. Norilsk Nickel, this is in Russia. It's a nickel. One of their largest mining things is nickel. They also produce copper and platinum group metals. This is another one, a dividend of about 10%. It's another one I own. I just leave it. Tech Resources, another one that's got 0.44% dividend, but this is a copper company. It's doing quite well. Looks like we could get a little bit of a pullback here. But overall, it's going to be trending higher, in my opinion. Southern Copper and Freeport McMoran. Freeport's looking decent, moving higher. Southern Copper looks really good. This is one that I would be a buyer down here massively. I think this will move on up. It's got a 5.33% dividend. So you're getting a dividend as you ride it higher. Alphamin's a tin company. This guy's been moving on up. A little bit of a selling pressure day there. We could see it head lower on the short term. South 32 has done incredibly well. I've been a holder of this since $7 on the channel. I spoke about it. $7 is in here. And then we've got the Anglo-American Platinum's been moving on up. That'll continue higher. Impala Platinum will continue higher. That one looks good. They've also got 7% dividend for Impala Platinum. Anglo-America has 4.19. Nova Royalty's been right here. It's been coiling up. We've been going sideways. This is a good entry point, I think, to be accumulating. And then eventually I think we'll get a run out of this. So there's that. We've got Rare Earth Metals, REMX. This guy's got the double booty bottom. This is a Wyckoff distribution. It comes back. This is the spring. We've sprung on up. Usually sits here for a little while, and then I think we're going to get a big run. So this is one that I think is a good spot to be buying down here for an accumulation. Lithium's been heading lower. I probably wouldn't jump in this second. It may still have a little bit more downside to it. Looks like a shoulder, head, shoulder. Maybe we get get a little more downside, but it's got the double booty bottom as well. And then the launch higher. This thing's launched quite a bit, so we'll see where it goes. I'm usually not a price chaser. I think Hovenen's one that, for a home builder, if this thing breaks out again, this was one of the most violent breakouts I've ever seen in my life. We went all the way down to $6 a share, and this thing has the potential, if it were to repeat itself, to go all the way to $1,000. Oh my goodness! But we're right below its long-term resistance line, and I want to see a break above $150 and a close above $150. Then I think you'll see a big old move out of it. That's if they can get the materials in the supply chain fixed, where they can start ramping up their homes. So there's that there. Moo is another one, an ETF, Moo. This guy's been hanging up quite high. It's got a big old pattern that it's broken to the upside. I like IPI, Intrepid Potash. We've got this long-term double booty bottom. It's got a spring here. We're right up on top of this resistance line, and when we break that resistance line, I think we're heading to $130 quite quick. I think we'll break and move our way up pretty good. This is one that I've been accumulating, is Intrepid Potash. The other one I like is Mosaic, another fertilizer company that's been moving. If you look at it, backed out, we've got the nice good flag pattern that we've broken to the upside, and we're moving on higher. So that looks good. I threw in a megaphone pattern on top of it. I think that we could potentially go all the way to even maybe 450 if it were to go all the way to the top, or $500 if it were to go all the way to the top. I don't know if we're going to get there, but that's a big old move if it does from where we are today. I was a buyer from down here. And then the overall markets, like the S&P 500, it's been struggling, guys. We're up in this rising wedge. We're going into an expansionary phase of real estate. This is the expansionary phase of real estate here and here, where the markets go lower to sideways. And I think that's what we're entering right now. On the short term here, I think we're coming down. I think we're going to head a lot lower and go sideways for a decade plus during an inflationary period. And I think the NASDAQ, that was the S&P 500. The NASDAQ is going to do the same thing. I think we're going to go sideways for a decade plus. If we were to zoom all the way out, like here's the last market here, where, and this is exactly how I would play it, guys. You got this big thing here, and 98 was right here. So 98 is when we should be buying commodities, and you would have loaded up into commodities all through 98 to 2000. This is the overlap. 98 to 2000, you had your rundown. It goes all the way to 2002, and then we had a launch in commodities during this entire time frame. When you go to 2008, this is the bottom of so you sell out of your commodities in 08, which is in this portion here. You ride it down, and then you pick up your stocks in 09. And then this is the move that came after it in the low inflation, low interest rate environment, which is really good for stocks to really take off, and especially the NASDAQ composite. And that's where you want to be. Then you sell out in 2020, you start selling out of these stocks here, because your upside's limited, your downside, you have a lot of risk. And you should have been buying commodities, rotating into commodities during this time frame up here in this tip. Now we're riding the commodity bull train. And that's how you rotate between sectors. Yep, it was sideways here all the way to about 80. And then you jump on this, ride it all the way up. And man, we have such a good system on the channel, guys. It really is. And then some of these other ones, like Roku, is getting absolutely destroyed here, guys. Look at this. Look at this. Oh my goodness. Look at it. Boom, boom, boom. Just getting hammered there. Another one, the trade desk, I would suspect, if it breaks out of its long-term support, that could get hammered. Baidu, this guy's just been chilling, going sideways for a while. We've got, Chipotle. This is one that I would be a buyer in 09, $50 to $18 or to $2,000. Holy moly. But we've broken to the downside. I probably wouldn't be entering here, this long-term support line. So that's what I've got for today, guys. That's kind of the overall market we're looking at. I would not be jumping in anything that's like just overall stock market, like S&P 500. Anything that's a consumer of commodities, it's probably going to be going against the wind. I would be a commodity, precious metals, real estate person at this time. Physical real estate, like buying physical real estate, buying a house. I think that's I think that's a good idea. That's me. We still have very low interest rates. It is a leveraged bet because you have a loan, so you can put very little down and really get a huge return on it. So long that we have a rising real estate market, which I think we will for a good period of time longer. And then commodities, I like the energy sectors quite a bit, and I like precious metals, physical precious metals especially, because if they try to do things like stopping your bank account or whatever, you have all your wealth, it's diversified out of the system. There's no counterparty risk. I think it's great. And I think eventually there's going to be far less physical metals to purchase in the future. I think we're going to get declining production. We're going to get harder and harder and way more energy intensive metals to get out of the ground. So I think that's a good bet as well. If you guys like the content, give me a thumbs up, subscribe to the channel if you haven't already, and thank you for listening. This is Finding Value.